Tried to get a mortgage, but the bank said no? Well, that's frustrating, and that no can sting. So today you're going to learn the 4 reasons why your mortgage application got declined. I'm Ed McKnight, an economist at Opus Partners, and this is Property Now. Number 1 is actually what I've just experienced. It's when your house isn't quite as valuable as what you think it is. So I was looking to purchase this property here, and I was planning to borrow the deposit against this one over here. Now, to make this work, this property had to be worth about $600,000. That would mean I could borrow $130K against it, and I needed about $125,000 to purchase this property in terms of the deposit. So this one had to be worth $600K, and from looking at the data online, I thought that was pretty reasonable. But then when I put the mortgage application into the bank, they said, well, you've got to prove it's worth $600K. A valuer came in and they said, actually, it's only worth $550,000. That means I could only borrow $90K against it, and I'd need to make up the extra difference between what I could borrow and the deposit I needed through my own savings. Now, this right here is one of the most common reasons why someone's mortgage application gets declined. You know, you go on homes.co.nz or you use a calculator online and you think, yeah, I can borrow lots of money against my property to go and purchase an investment. But then when it comes time to actually get the money, the bank asks you to get a valuation. And the valuer might not think your house is worth quite what you think it is or what homes.co.nz says it is. And this can also happen if the bank asks you to get a valuation on the property that you're buying too. Now, what's the key takeaway? Be a bit conservative with your property's value when you're plugging in your numbers online, or just also know that a valuation doesn't always go your way. The second reason your mortgage application got declined is you didn't tell the bank about some of your debts. This is very common. So you've talked to your mortgage broker and they think your application's got to get the big tick from the bank, so they send it in and the bank comes back asking questions about a credit card that wasn't on your mortgage application. So you might have forgotten about that credit card, or it could be a store card like a warehouse or farmer's card if you barely use it. Or this could also apply if it's a personal loan that you took out many years ago. But this can seriously impact your serviceability. That's the income side of your mortgage application, where the bank actually tests whether you can afford the mortgage or not. Now, a $10,000 credit card, even if you have not spent a cent on it, could mean that the bank thinks you are spending up to $400 a month, even though you're not actually. And if we ignore the nerdy calculations, that can stop you from borrowing up to almost $72,000 for an investment property, even though you're not using that credit card. So before you send your mortgage application off to the bank, make sure you're telling your mortgage broker about all of your debts. And one thing you might have to do is take that credit card and chop it up, because if your application is looking tight, maybe your mortgage broker might tell you to do something like that, and then they can help you sort it all out so the bank says yes. Sometimes your mortgage broker will look at your mortgage application and say, oh, it's tight, it's a bit marginal, and that means that the bank could say yes, but they could also say no. And you might just have just enough income or just enough deposit, or you're buying a property at just the right price. So your broker says, well, let's try our luck. We'll see if we can get it across the line. And sometimes the banks will say yes, but investors are also disappointed or get disappointed when the bank comes back and says no. And you might say to your broker, but you told me that they might say yes. So if your broker says your application is a bit tight, but let's give it a go anyway, make sure you hear both parts of what they're saying. Some investors will just hear the let's give it a go part. Now, one other solution to this, give yourself a bit of a buffer. So buy a lower priced property, or give yourself a buffer between the absolute maximum of what you can borrow and the property you want to buy. Don't make the application so tight from the start. And if you like learning about property investment in this number-focused way, don't forget to hit the subscribe button. We release new videos every Monday and Wednesday. And reason number 4, and this is one so many people mess up, you put the wrong income on the mortgage application. And you might think, How does that happen? Well, we had a situation recently where an investor said they were working full-time and earned $40 an hour. Now, full-time is 37 and a half hours, so the mortgage broker thought their annual income was $78,000 a year, and that's what they all agreed. But when they put the application into the bank, what actually happened was that she was working 30 hours a week, and so she was really earning $62,000 or just a touch over $62,000. Now, that meant that when the bank assessed their mortgage application, they used $15,000 less income than the mortgage broker used. And the issue here wasn't that the investor meant to tell a fib, they didn't mean to, but it's really important that you are precise when talking to your mortgage broker, especially about your income, because by the time your application gets to the bank, it could get declined, and it's really hard to turn a bank's mind around when they give you a no. It's hard to turn that into a yes. And your broker might have actually been able to help in this situation. They might have advised you to go find a cheaper property, or perhaps you could have talked to your boss in this situation about going to full time. We've actually had other investors too. Recently we had one who overstated their income by $150,000 a year. And again, you're going to be thinking, how does that happen? Well, these people were self-employed, and often people who own their own businesses don't really know how much money they actually earn, at least in the bank size, because their money is so entwined with the business. So once you send all of your financials off to the bank though, they are going to check things with a fine tooth comb. So if you do own your own business, be precise with your income, or even better, have a conversation with your mortgage broker. Now, the way to get a yes from the bank is to sort through all of these issues before you send the application in, because if you can submit your mortgage with really clean numbers, you're more likely to get a yes. And if you want to invest in property, make sure you check out our website, opuspartners.co.nz. We help regular Kiwis grow their wealth through new build investment properties.